Good morning, 9:31 a.m. Pacific Standard Time. This is a very special time this year, 2014. I have before us the S&P 500 chart, the carryover trade from 2013. We're starting a major earnings season on Monday to kick off. We are seeing that our trend reversal analysis that we told everybody before the year started is definitely working on this S&P 500 daily chart. We started it out right here, and this is all about the earnings. Right now, they're trying to price in the earnings at a lower bar to get that bull rally back intact. Right now, I'm below the 50-day. I just broke that 100-day simple, and the 10 and the 20 is about to do a death cross. Now, listen, because of where we're landing, some of the equities, believe it or not, that we told everybody, and I'll do that in a different video. And yeah, people are left $100 reversal on Amazon at its highs. Netflix, $100 reversal. People might not see those numbers for a number of years again. What I can say, though, MMT, that was a software program that drove these prices higher. And you know what? In every major market reversal from bull to bear or bear to bull, there is a set of behavioral patterns that set up. Now, I'm going to tell everybody we have a daily sell signal on the S&P. Okay? And we did not have that until we were over here in January when this thing snapped its back and got down to the lows, and they rallied right back up. They made the higher high in the S&P. I'm going to tell you at this point where the support level is and where that daily sell signal. Now, it breached the 50-day at 1843. Like we said, yes, we did. The 10 is about to cross over the 20, and here's the deal. Once that starts happening, that 20 weekly moving average, and I'll show that weekly moving average compared to the daily. Here I have it right here, and I have the S&P right here that equals that 20 week equals those other key moving averages. We fell below the 20 week on the S&P finally, and we knew this was going to happen. We also knew that we were going into this earnings season that I'm talking about, and how far down this reversal started on last week. They had a bull rally, then the bear came right back. You broke this weekly moving average during this week. One of the things that I'm going to say is the high was 1872 and the low was 1814. That is definitely a reversal from the last time we made this last round of highs. And the 20 week is at, believe it or not, it's below it because it's 1829 and it closed at 1815. We are below the 20, we are below the 10, which is 1845. And now on these weekly moving averages, when you look at your daily moving averages, these are what your daily moving averages look like. The 10's crossing over everything I said. On a daily, it's broke with a daily sell signal, no matter what. And so what I'm going to say is that the next major area of support is the following with the S&P. Now remember, we're selling down for the first time, and we got that volatility. Yeah, people didn't even know what volatility was all last year. They were dumb. Why is the market going up? Why is the market going up? Well, hell, who cares about that? Let it go up when it wants to go up, and let it go down and make money when it goes down. The thing about it is once again, it's got a sell signal. And we are going to be buying more put options. We have them all here. And we covered every last one of them. And April is out of the way now. So I'm going to delete those. And I'm going to start with, again, just like we did a couple of weeks ago, big money is here. And big money is here. So let me just show everybody that we're doing these put options in May. Now, everybody was anticipating this big spring rally. We said that everyone already had the rally. And they did. And now they're going to pull back, and the bear is in control. Okay? When, when the bear is in control, is with a daily moving average sell signal. And then it broke right through every daily moving average 10, 20, 40, 50, and now the 100. Give me a break. That's all part of 1, 2, 3, 4, 5. That's this whole weekly red bar here. The thing that we like is that they finally have sold this thing going down into earnings season, and we're going to be taking a look at some of the S&P 500 stocks that have had a correction. Technically, when we call for a correction, it's always got to have a daily sell signal. That is the start of the correction right here, as we had called for. Stay tuned. Nonetheless, this is the S&P 500. Now, I'm going to be happy enough to say that the S&P also did something that we haven't seen for a while. What is that? We're going to go over here to the monthly chart right here. This is the monthly chart. I'm going to put the S&P in here. Here it is. So let's get that one put up. I have before me the 60-minute daily chart of the S&P 500. And one of the things that I'm going to say is that we undercut this major pivot line right there. Now that we're going into the earnings season, just remember, I'm going to go over this monthly moving averages. There's going to be a lot of volatility that's going to move the S&P 500, but we do know one thing for sure, is that they've taken the time to sell down those good stocks going into this report. I'm not saying that the earnings are going to be bad. I'm saying that they're trying to price it at a short-term fair value, because they are. I'm going to go over that 10-month moving average. And it starts right here. That's 1774. Okay? And that's where we would see a big bounce coming. The other one that we feel is going to happen over time is this 20-month, 10-month here, 20-month here. Bull is extremely strong. However, since we've started this year, you can clearly see, and I'm going to clearly point this out. Here is the thing. This was the January, and we went to the low in January in that month to 1770 right here. Then in the February, we start off at 1867 right here on 2-1 for the calendar month. They come back in, boom, they shoot that rally over here to the 3-1 highs of 1883. That's where it was on the monthly high. The monthly high here, 1897. We've taken a great haircut as of right now. Look, this bull run has been going for many, many months. It's 5 years. The 5-year expansion model is over. Listen, you got all the analysis already. I'm just going to let you know, though, that in the longer term price volatility now, that this S&P 500 is overbought. This particular reversal movement so far in April is exactly 1897 to 1814. And what that really comes out to is you got to take a look at, that's 82 points reversal. Now, having said that, this particular bottom here, which was 1737 to that high of 1883 on a monthly level, that volatility is really picking up. So what I am going to say with the earnings season and the S&P 500 stocks, which I'm going to show, from a 60-minute level on that S&P, you can see that reversal. The reason why I wanted to show this was on 4-4. Look at that sell down to the 4/8 on the low. Now, listen, we've always said this. The bull is still strong, but let me tell you, I can't say that this is 100% the big one, though. I can say, though, that the algorithms are working in the overall 60-minute trend, where when we make these highs, we get these great corrections right here. Straight down, you counter rally, and another lower low. When you go over here in March, straight down, but what did we do? Overall, on a 60-minute level on 321, we hit a high, which was higher than that reversal. Then, from there, we have that reversal to here. This was another long tooth on a 60-minute handle. Goes all the way up here to 4.4 when we started that 60-month reversal. But you can see what has happened here. We always rally up, but here's what's happening. We're making lower lows, and or we're hitting short-term support levels, and that was a counter rally over here, this piece of the 60-minute, and the S&P is in trouble. Now, here's the thing about it, though, from a 60-minute level. Short-term now. I'm using the word short-term. I'm going to use it at short-term. So, here's the deal. When we pop up, we're going to roll over. Right now, on a 60-minute level, we're oversold going into that earnings season tomorrow morning. I just want everyone to be aware that this particular 2014 period is weighted both for the bull and weighted for the bear. But when you take a look, bear comes in, bear comes in, the bear comes in. And when you take a look at the overall distances, like right here, this whole pattern right here, and it gets up here, that higher high, that now here's the deal. There is that peak right here. There's that rally, bam. So we're short term on a 60-minute level, oversold for going into the earning season. And all of last year, it was just the opposite. You were overbought, and it didn't matter. A machine, software machine, kept assets in a higher value. Go see the Ghost Exchange movie we put together. So I'm going to conclude that we're oversold short term on the 60-minute chart. On the monthly chart, it's a bag of, so far, this big volatility is much, this big bull is the bigger part of the overall trend on a monthly level. This month here and was over, that's February. That's the March narrow range, but it starts with the classical what? Monthly descending value. And we can clearly just see from here that this half bar, I'm going to draw a trend line. It's going to be about right here. So let's just see what this is. How about that? So we're sitting on it right now. And I want everyone to know one thing for sure. The earnings, some are going to do good and some of them aren't. And the thing about it is, this is the breakdown in the S&P. And hallelujah for you, because what I am going to say right now on the daily chart, you got to look at the daily signal right here. Now look at on this daily right here, they really whacked it, and then they started with the continuation below this low of that, and this is on a daily level. Now short term, we know we're oversold, so any bounce is going to be selling short. Or if you hold something and you're just watching this video, sell your stocks into the rally that you will get. It'll pop up just like it's done all year. And so I am saying to people, listen, that is the start of it right here in a major earnings season. Stay tuned. It starts tomorrow morning. Be advised, the intraday S&P 500 stocks, and we're going to go over these stocks in the S&P 500 again. And basically, just to let people to know, MMTs, this is going to be your next assignment. And that assignment is the following. Is the S&P 500. We will go through the ones that are the leadership ones, and we're going to go through here and we're going to find out exactly how they traded. And I'm going to set this for you all to understand one thing. There is a broken stock price line, BIIB, ISRG. There's a slew of them in the S&P 500 that created that selling. So when they were selling those names down, you were going down in that S&P. And it's the first time this year going into the earnings season that we have the beginning of a daily sell signal, and that these daily simple movement averages are going to be resistances. So that volatility will pick up and remain here.